Hello everybody, welcome to another update on the stock screener. Today we are talking about Tristar Gold, which is a developer of gold in Brazil. When we look at the chart, you can see that we have bottomed out somewhere last year, and then we went up and we have a higher plateau now. So I think this is going to go higher in the future, and I will tell you why. So let's take a look at the presentation quickly. So they have this gold deposit here. As you can see, the gold deposit has been growing. They have about 2 million ounces of gold. We'll talk about the numbers later on. So they have done the PEA and the pre-feasibility study is going to come out. You can see that the gold is pretty at surface, and that's actually the key to the valuation of this company. So they are now at PEA, and pre-feasibility study will come out. Then they will do the feasibility and permitting and construct the project. So why do I like this company? And the key was that the gold was at surface. This is very important because when you have gold at surface, then the costs will be very low to mine it out. Look at this. We are at 0 to 20 meters. 0 to 20 meters. Okay. And the grades are pretty good. 1 grams per ton. So for example, here you can just drive to that property and just use your shovels and just start digging out this gold, figuratively speaking. It is so close to surface. So it's very easy to mine. They will probably do an open pit mine to mine this out. And 0 to 20, I mean, 20 meters is nothing. You can easily just dig that out with some equipment. Same here, when you look at all these results, all of these mineralized zones are very close to surface, 650, 600, 550, so 50 to 100 meters. That's nothing. Look at these drill results here, 40, it's very at surface, 0 to 13. They even have gold at surface, 0 to 13. And these are very good grades for open pit. 0.5 grams per ton, 1.6 grams per ton at surface. Here as well, all of those drill results tell us 16 meters, 3 to 3.8, 10 meters. So it's very close to surface and pretty good grade. So that's why we have a developer that will have low costs and high profits. And we will show you that here in my calculation. You can see that the NPV at current gold prices is $770 million. And the market cap is only 50 million. So because the gold is at surface, we have a very high NPV and a very low cost. AISC is only $680 dollars per ounce. So that's a very low cost mine with a very high NPV. So the NPV is somewhere here at the exchange rate of 5 at 1800 gold, we have $770 million. So if you just look at the upside in NPV, this is just more than tenfold from the current market cap for 8 years of mine life. So if we normalize the 8 years to, let's say, 5 years, then we divide this by almost 2, so that will be around $400 million. So $400 million should be the real value of this company, because in the first 4 years you will go to 400, and then by the end of the mine life at 8 years you will go to $770 million. So I see an upside from 50 to at least 200 million, let's say. But it should be valued at 400 million when construction starts, of course. We do have some capex, 180 million. So if they can finance this somehow, then value will be created, because NPV is multiples higher than the capex. Very important. Grade is also very good at 1 grams per ton for open pit mining. And the next catalyst is the PFS, which will come out in August. When we look at the production numbers, we have 130,000. That's very high. I did an EBITDA valuation of 5 multiple, and that gave me a valuation of 700 million. So almost the same as the NPV. So that confirms that this company is undervalued. So I asked the CEO some questions, and he confirmed that the pre-feasibility study will be completed next month in August. And then they will start with the feasibility study in parallel with permitting. Now, permitting is, of course, the most dangerous part, because if you don't have a permit, you don't build anything. And it looks like the problems should be in the tailings storage, but they have a very clean rock, a safe location, so they don't see any issues here. So the permitting should go smoothly. So that will be a low risk, the permitting process. And yeah, I think this company is massively undervalued when we look at the NPV compared to the market cap. So it's just an idea. Do your own due diligence, and I'll see you in the next video.